There. Let's actually bring in Chris Conway from the Australian Stock Report, who joins us live from our Melbourne studio. Chris, we'd love to get your thought on the session. We were just talking there obviously about these pretty lofty levels here, and perhaps some of those risks ahead, but there's no denying that there's a lot of momentum, a lot of sentiment behind the market at the moment. What is your thought on it? And obviously if we're coming into the back end of reporting season, whether it has been good enough, I guess, to justify some of these valuations.
Good afternoon, Leanne and team. Yeah, look, I would echo a lot of what David just said in terms of there being a lot of momentum in the market. And whilst valuations are stretched and, you know, we all look at a CSL and think it shouldn't be trading up here on this valuation, me as a trader, I don't really question it. I put my trading hat on and I look to ride that momentum until the market tells me that I shouldn't be. So again, just echoing what David said, you know, you keep riding it and you have tight stops, so you have your risk management in place, ready to take you out of those positions and out of the market should the trend reverse. But yeah, look, continue to ride the momentum for me and don't question the valuations, because you could have 100 goes at it and you might be right once and you've missed, you know, maybe a 5 or 10 or even a 15% rally. So stick with it until it changes.
What's your view, Todd? Would you ride the momentum, or would you be a little cautious at around these levels?
Look, I don't want to be too bearish on this market, and it is very easy to be bearish on it. But you know, when you look back at the US, you know, underlying a lot of experts that I've been seeing lately have been calling that the growth there has actually been really good. And the common sense part of me says that, you know, you can't keep putting your foot on the accelerator, and I don't want to be buying the US market, certainly not at these levels, record highs. It's just, you know, but as a broker, I have to participate in the market, so I am looking for those little anomalous ones where, you know, a big cap has fallen back or been beaten down, and I like the story. So, you know, sitting on the sidelines isn't the thing to do in this market. As Chris just mentioned, you know, you really do need to be participating, but it's tough to know where, and I think, you know, you can't put all your eggs in the US basket at the moment, and certainly here, you know, there are a few little opportunities, but it's tough to know.
Can we just talk the banks, because obviously financials have been in keen focus because of Westpac raising mortgage rates only yesterday. We know that there was a big pop yesterday after that announcement. Just giving back a little bit of it today. I'm seeing here for Westpac it's down very slightly, but still at about $28.87. Chris, I might throw this question out to you, because I was reading, well, a couple of notes actually from brokers, Macquarie, saying, you know, given the rate rise here and that the other banks are likely to follow in the lead of Westpac, they suggest this could actually be an opportunity to take the plunge on their hard-hit shares, given the earnings benefit from the mortgage repricing here that will flow through. I note that Bell Potter's actually upgraded Westpac from a hold to a buy as well. Would you reiterate some of that commentary from those brokers? Would you be taking a look at the banks with their share prices at these levels?
I would have thought, Leanne, the time to buy the banks was probably a couple of months ago, when we were right in the midst of the maelstrom coming from the Royal Commission and the, you know, extreme negative sentiment towards the banks. They have rallied off their lows. Does this, you know, move by Westpac and, you know, the other banks likely to follow change things all that much? I wouldn't have thought too much. You know, I bank with ANZ, and they had recently been cutting rates on certain mortgage products. So if they raise now, they're just reversing what they did, you know, sort of 6 to 8 weeks ago. So yeah, look, it will add a little bit to their bottom line, but no, I don't think the banks now have a mandate or have this wholesale opportunity to go out and raise rates considerably to expand their NIMs, because the political environment won't allow it anyway. I mean, look at the backlash we've already seen from Westpac doing what they've done with Josh Frydenberg questioning, and, you know, the pollies will always do that and it won't change the actual outcome, but I guess the key there is there's still a pretty strong political environment that I would have thought would prevent the banks from getting too crazy with raising rates.
What about your view, Todd? I'll ask you in a moment, David. I mean, do you think the challenging operating environment has already been captured in some of these discounted valuations relative to what we've seen for the broader market? Because I think prior to some of the moves today, the big banks were at about a 34% discount to the All Industrials Index. So do you think a lot of that uncertainty, that regulatory environment has been priced in now?
It's difficult to know, because, I mean, look, Westpac dropped quite considerably the last couple of trading sessions. They come out yesterday. You know, it was an easy buy a couple of days ago below $28. They come out, they've adjusted their rates, and you know the thing jacks up $1. You know, I mean it's easy trading, but for my clients, most of us are already got our boots full of the banks. It's where are they going from here? I think you know Chris was right. You know, a couple of months ago was the buying opportunity if you had the stones to step in and want to buy them then. But the Royal Commission, and more importantly, where are the banks going to be in 5 years' time? What do their businesses look like versus today? And when you're buying something today, you should be having that longer term view and buying on the back of that. Now, obviously, all of them have sold off wealth businesses. They're fundamentally changing as we watch them on a daily basis. So I need to get comfortable in my head around what a bank is going to look like in 5 years' time before I really start to bang the table and say to my clients, let's buy them now.
David, what are your thoughts on the major banks?
Yeah, look, I can go along with a lot of the comments being said already about the banks. I mean, for my money, it was an opportunity when it was at these banks were at the lows, as Chris said a few months ago. And I'm just looking at the charts now, a lot of these banks, and you know, the technical picture is very much uncertain or neutral. It's not bullish, that's for sure. So I wouldn't be rushing in to buy the banks. I think the opportunity was there at lower levels. I mean, look at the volatility in Westpac alone. I mean, increasing their interest margin will help the banks, but then how does that impact the consumer out there, you know, and their loan, the debt to equity ratios as well. So that's a big question mark going forward, you know, for the banks as well, and, you know, bad debt scenarios, which, they, you know, look, they've had a great nirvana period here of the last 2-3 decades. And there is clearly a slowdown going on in the housing market at the moment and the construction sector. I mean, yield-wise, you would hold the banks. I wouldn't be rushing to sell them right now, but on a chart, technical picture, it's not what I call bullish, that's for sure.
Okay. Let's have a look at some of the best and worst performers that we're actually watching through the session. I do want to start off with the top movers there today, because a lot of the support that's coming for the telco sector more broadly, big move for the broader sector, is because of the move that we are watching on TPG. You can see it's the top performer now, up almost 16%. Big move as well that we are seeing for Vodafone. So look, I think it's as I say, almost 16% move there. But you know, this deal between TPG and Vodafone, quite a whopping deal there, $15 billion. We were hearing from David Teo a little earlier there, the CEO and will be chairman, in fact, of the new merged entity. Let's take a listen to a couple of comments that we heard from David Teo.
Iñaki will be the CEO, and I think we, on both sides, the infrastructure are very highly complementary, and the teams are highly complementary, and we have a lot of good people. So I think I have full confidence in the new team. This merger with great size, scale, and financial strength for us to compete with the incumbents, and that will bring tremendous benefit to the Australian consumer.
All right, well, there you have a couple of comments there from David Teo, planning on obviously taking the fight to Telstra and Optus following that big merger deal there, the chairman of TPG, that big move there. And Hutchison was the other one, Hutchison Telecommunications, HTA was the one that I was wanting to point to. Big move there, 48% higher. But you're also seeing a flow through to Telstra and Maysim, the broader telco sector. Chris, your thought on the merger deal there, because just judging by the market reaction that we have seen today, it seems to have been very welcome news across the broader sector.
It certainly does, Leanne. Look, I was on the show a couple of weeks ago talking about the need for some consolidation within the telco space. You know, it's a story that's been evolving for a number of years now, and these two had been slated to team up for a while. But, you know, it is a sector that is fiercely competitive. We all know that there are too many players probably still, and there are too few clients. So just from that broad perspective, this merger does make sense. With any of these mergers, I always like to ask myself two questions. The first one is, does it add new clients? And I think in the case of this merger, it does, because of the differing assets between TPG Telecom being more fixed line broadband and Vodafone, which is more mobile. So it creates a huge opportunity there for cross-selling opportunities. So that plank gets a yes, it gets a tick. The next question that I always like to ask myself is, does it change the narrative within the sector? And what I'm talking about there is that very fierce competition that's in the space. And unfortunately, I think the answer is no. So while this new entity will be bigger and stronger and have more financial clout and be able to compete more effectively, it's still competing in that same space that is already fiercely competitive, where margins are being contracting, and everyone's fighting with each other to, gain market share. So, yeah, the deal itself, I do like it, but does it make the space any more attractive for me? No, probably not.
Okay. I might actually bring in a viewer email at this point, because there is an email here from Anne just asking about the telco sector. And Todd, I might just throw it out to you. Anne's just asking, would you be buying into any of the telcos at current prices?
Not the smaller ones. I mean, the jump's already been had in the Hutchisons and the TPGs. Look, TPG's network isn't really a competitor to Telstra's 5G at the moment. It's aimed at a different area, and as Chris just alluded to, the Vodafone customers that will then come on, it does add synergies to their business, but at the end of the day, is it really a viable competitor to Telstra? And I have to say no, I don't think it is. Telstra's still the big dog on the block. Telstra at $3.20, wherever it is today, ex-dividend yesterday. It held its dividend very well, but it's had a really good jump to get back up to these levels. Now, I believe it's going to be a slow incremental grind from here. You've got Andy Penn cutting jobs. He's trying to turn the ship around. But 6 weeks ago, Telstra was phone a friend. It was loveless. It's been a good rise for those shareholders brave enough to step in at $2.85, but realistically, with all the moving and gyrations in the sector, it could get back there. So I don't want to get bearish on it, and I'm probably not a buyer of it at this level. I'd rather sit in it with the existing clients that I have. I'm still a shareholder myself in Telstra, and I'll just sit there and take my dividends and see how she goes.
What would you say to Anne, David?
Yeah, look, I'm very much the same view. I mean, we spoke about this time a month ago, like when Telstra was below $3, it's like, wow, you're looking at close to 8% fully franked yield here. In fact, I put some clients into it $2.60, so they're very happy. They've had a 30% share market gain plus getting the dividend as well. So look, there was a correction due in the sector. It had been oversold for some time, and so not surprising. And if you're a TPG shareholder, boy, what a great opportunity to take some profits up here, in my view.
All right, excellent. Look, Chris, we are almost out of time, but I might just end the conversation with you. We're obviously in the back end now of reporting season. It's almost all over, so I'm sure you've been crunching the numbers on a couple of stocks. What are you looking at the moment? How are you positioned currently?
Just bought some more Boral this morning, Leanne. This was a stock that I've talked to you about in the past, and we had been holding for a while. And we bought it after it had that 10% decline after it missed some numbers due to the Headwaters acquisition. But we thought they were transitory factors based on weather rather than anything more significant operationally. We continue to like Boral. We think it has further upside. Its EPS profile over the next 3 years is looking at about a 20% per annum increase. Valuation-wise, it's about 12% discount to where it historically trades. So a high probability of a PER re-rating combined with the underlying EPS growth story. As I said, we think there's further upside there. A couple of others that we've bought off the back of strong results. OZL, Oz Minerals, obviously, is one that we like. Looking for a bit of a rebound in the copper price there because it has been sold down so sharply. And the other one is Codan, which is an imaging company that's just signed a big contract with BHP. Probably more on the speculative end of the scale, but one worth looking at.
All right, fantastic. Chris Conway, really appreciate you joining us on the show today. Thank you so much for your time.
Thanks, Leanne. Thanks, gents. Cheers.